Welcome back, and joining me as we recap on the day's markets activity is Wessel Joubert from Oyster Catcher Investments. Thank you so much for your time, Wessel. Now, of course, the big news today is NVIDIA. The results haven't even come out yet, and it seems that markets are nervous pre the release of those results. Are markets here maybe fearing an NVIDIA-triggered correction at this point?
Yeah, so I think one of the big causes of the fear is the quantum of the impact that NVIDIA can have on the markets. It's grown at a phenomenal rate. It's overtaken some of the biggest shares in the US in a very short period of time. And over the past 2 years, I think from beginning of last year, you're looking at a share that's up more than 200%. So even a small misstep or indication that AI growth is going to slow can have quite a big impact on NVIDIA's share price, as that is what has caused the very high multiple at these levels. Yeah. So if the market does expect to slow down in that, which the customers call it Facebook, Google, Microsoft have all reported, they seem to indicate that they will still increase their capex. A large portion of that capex will get spent on or at NVIDIA. They haven't really made the quantum of that capex available to the market. So all of them just saying that they see their capex being significantly higher or higher than what it was last year. So the NVIDIA earnings will kind of give us the quantum of how much that capex is going up by. So the market does expect NVIDIA's results to be positive. The question is how positive. And if you do get that correction, the market will most likely extrapolate. If it is slowing down slightly, they will extrapolate the slowdown going forward. And because the multiple is so high, you will get a fairly sizable correction, if that is what the market perceives. So the market is on edge a little bit. And then we also know there's a lot of retail traders and a lot of options out on NVIDIA, which makes the swings quite volatile. When these events do happen, but we're hoping for the best.
Yes, indeed, crossing fingers. Well, let's go into the companies that came out with results on the JSE. Bidcorp being one of them. Annual results there, we saw double-digit growth from the top to the bottom line, saying that they extended the positive momentum from the record FY23 in most of its markets. Of course, we did see investors reacting positively there. Can this company do no wrong in the market's eyes?
It seems not. So, very, very good company, very well run. And then the more you look at it, the more you realize that it's a company that's sizable in the SA scheme, but smaller in the bigger scheme of things. So fairly low market shares in all the countries that they play in. They've got the world as their playground, so quite a lot of opportunity to continue to grow. But we saw revenue up around about 15.5% there. Very nicely helped by rand weakness. The constant currency revenue growth there was 7.5%, and they were able to improve margins in a lot of the geographies, which is contrary to what the market expected. They always come out saying they don't give margin guidance, but they will do their best. And when you look at Australia, where apparently things are really tough for them, they've been able to take their trading profit margins up from 8% to 8.6%, which is a big jump. Then where the market did have some concerns was in the UK. They had quite a weak first half, and it turns out the second half was very, very good, and they continued to guide the UK margins higher in the future. So the results really, really good and really resilient in the face of a fairly weak market. They have guided somewhat mixed signals going forward, saying that they are seeing quite a few geographies that are very, very tough. Australia and New Zealand being one of them. The UK seems to be turning a corner. Europe still seems to be a little bit sluggish. But even with that, they seem to have a very optimistic tone, even on these higher bases that they've been forming. So a very, very good quality company. And one of the key components in their growth is actually acquisitions. And for the past couple of years, we've heard multiple times from them that there's one or two opportunities available, but nothing significant. Whereas this time around, they are seeing a large number of M&A opportunities, and their M&A has actually been very, very good, contrary to what you usually get out of a lot of companies where they overpay for businesses. Bidcorp has a very good track record of buying these types of businesses, and for these businesses to then grow into the ecosystem, and you actually extract proper value out of it. So very good results from a very good management team, but you are paying up for the company. It is trading on quite high multiples or lofty multiples, but maybe that's justified.
All right. Before we get to your stock pick, Wessel, let's quickly go into Murray and Roberts on the other side of the spectrum. They came out with a trading update talking about a loss that has narrowed, but markets didn't really quite catch on to that. We did see a share price slumping almost 2%. As much as there is an improvement, is it still too shaky for maybe too much of the clever money to go into the stock?
The Murray's market cap has actually shrunk significantly. And I do mean significantly.
Yeah.
So there's a lot of institutional interest that have waned. So I don't think a lot of the institutional markets giving it a lot of thought anymore.
Yeah.
What we have seen is Murray's were in a very tough spot, call it a year or two ago.
Yeah.
They've come out of that, they put the Australian business into administration, which is business rescue in South African terms, or liquidation in South African terms, rather. They've used that opportunity to reduce the debt significantly, which is starting to show. They've cut head office costs, which are coming through. So they are on the right path to improve. And when you look at WBHO and Ravix's results, a little bit of a less of a read-through than what it used to be. But both of those have come right, and they are seeing quite a few opportunities. The company's operating in the mining space, delivering services to the miners as well, which is kind of where Murray's is exposed to, also show quite a bit of promise. So they do seem to have turned a corner, and the share price has rallied quite nicely over the past couple of months. I think that's why the trading statement didn't get that much of a positive reaction. But they are still loss-making, and it's not without risk.
All right. Well, as you're talking about opportunity, let's go into your stock pick for today.
Yeah. So we do think Absa at these levels seem to provide quite a good opportunity. It's a fairly big bank. They've had some management churn. Most recently, Ari, the CEO that departed, he wasn't there for a very long time, which doesn't read well. But when you look at these large South African banks, it's very difficult for a CEO to make changes in the short term. It takes years to make decent changes. So barring that, when you look at what happened, Absa started lending into the market post-COVID too early. So a lot of their loans had slightly higher credit loss ratios than expected previously. But if we look forward, currently they're trading at a 0.9 times book value. That might be justified under certain circumstances, but we do think that gives you a bit of a margin of safety at these levels.
Okay.
Then they still provide you with a decent dividend. They have some hedges on interest rates. So as interest rates go down, their net interest margin should be somewhat protected relative to the other banks. And then you have credit loss ratios that should reduce a little bit, which we think is quite a big positive. And the two-pot system, they will be the biggest beneficiaries of two-pot coming in. That being said, they underperformed the banks significantly, and we do expect some catch-up from that.
All right. Well, thank you so much for your time and giving us those insights on what has moved investors' money today, Wessel. That was Wessel Joubert from Oyster Catcher Investments.